Good evening. Ira Epstein, and here we are with your SPDR ETF stock market wrap-up. And this wrap-up is for Thursday evening, the 16th of February, 2023, on a nasty evening in Chicago. It's cold, rainy. It started off with rain. Now it's freezing, it's icy, and it's wintertime again for a few days. Then we'll get back into the 40s and it'll all melt. We are February 16th. Now, before I go too far, it dawned on me today that we have President's Day coming up on Monday. Well, I have a special for you. If you'd like to take advantage of my research, that's my morning ETF subscriber video. That's the ones you don't see here, the private ones. My futures, the combination of the two, my written updates. There's a whole package. 50% off right up until President's Day, and then it's over. And may not get an offer like this again for quite a while. So, a great way to do it. It's only available to new and returning customers. Existing clients, I will not honor it, okay? Let me pick up some new customers here, and that's what this is all about. You can call my staff about it. You can go to our website under the word research. It's all set. Just go in there, buy it. You get your discount, 1, 2, 3. You can move your cursor at any time up here if you're on your PC, and an icon will appear. Give it a click. It'll take you right where you have to be. Choose what you want, and away you go. It's a great way to cut your price in half. Give you an example. It would cost you for 1 month, now what, under $4 to see my 24 videos that you don't see? I mean, come on, that's a joke. But you're going to give up getting them for 1 year for that price because, as I said, this is for new and returning members of mine, past subscribers. Okay, let's go to the marketplace. Let me give you the spiel that I'm looking at. We have been in an unusual environment, actually since last June. It's the market, and we had the naysayers driving markets up. Every time the market breaks big, they come into the marketplace, they buy it. And the saying is the Fed can't stay the course, that the Fed's getting closer and closer to the end of interest rate hikes, and that when that happens, if the economy turns before the end of this year, 2023, they will pivot to lower numbers. They may be right. I'm not in that camp, and I think you realize that, because I believe inflation is sticky. And I think you're there. I don't think it's going to come to be sticky. I think you've entered the sticky part where it goes, I can't move, I'm stuck. Why? PPI, CPI, retail sales, jobs. What else you want me to tell you about? All these different parts continue to come in with stronger data than you think. And it's month after month of a 1/4 point or more hike. And they're still doing it. You can't even get the unemployment claims, which came out today, to get back over 200,000. They fell 1,000 again. This is not how this works. And the Fed has to be saying to itself the same. And you're now getting the cracks that are coming out. Loretta Mester comes out. She says, had she been able to vote, she would have done a 1/2 point at the February meeting. James Bullard, he was in favor of a 1/2 point at the meeting. Now, let's just take those two and go no further. Now they've seen these new numbers come out. What do you think they'd be saying today? Inflation is sticky. It's there. Let's address it. The other groups say there's a lag effect. When that lag effect comes in, we'll get it. Lag effect is transitory. They're one and the same words to me. How wrong was the Fed on transitory? I was wrong on transitory, by the way. I thought we'd get up and things would happen. Boy, did that not happen. Well, I think this idea of a lag effect is wrong. I think you're sticky. I think you've already dropped the inflation numbers from the peak of 9% down to the 6 range, thereabouts, 4 range. Depends which indicator you're looking at. And I think from here, it's a difficult road to hoe. And as such, I think the Fed's got a real predicament on its hands. The 1/4 point hike baked in. To get everybody to go to a 1/2 point, I don't know. That's going to take a lot more data. And there is a but. They get that data before the next meeting. So I am in the camp that when we see what February turns out to be, very important. If jobs are strong again, if CPI, PPI comes out, all those numbers, forget it. Now, when do we get those reports? Well before the March meeting. So how do you play it? Okay, today was a change. You had more hot numbers, you dropped down early hard, and then the market did its typical gallant back, and I'm watching it, and at about 2:30, I'm watching the market, 3 o'clock, and I'm sorry for hitting that, 2:30, 3 o'clock, I'm watching the market, and I'm going, uh-oh, this is different. We're weakening. And I have to tell you, I did put out special updates at 3 o'clock as the futures were still open, watching this finish, and I'm telling my clients, in one word, sell. We'll see if I'm right or wrong. Could be very wrong. Let's go to the charts in the SPY. You're in a consolidation phase. You haven't poked out of the top or the bottom. The market has a pattern of a higher high and a lower low. The chart in the futures is more bearish than this. They have turned out and out bearish. This market is trying to hold the 18-day average of closes. That's the delineation point between upside bias and down. If the market closes under it, I have downside bias. If you get a hard break tomorrow, it'll be interesting, and we'll cover it over the weekend. What do the weekly charts look like? But right here, on this particular market, all I can say is you didn't have the power to get back to this market, the upper Bollinger Bands. You're fighting a battle against the 18-day average. Neither side has won this battle yet, other than, in very much fairness on SPY, that we still are over the 18-day average, giving the market an overall bullish bias. That can all change tomorrow with a good hard close, and you open the door up for this, if that occurs. The futures are easier, a better looking chart than this right now, because they're trending at least. And they're trending down. Let's go to UGA, which is the gasoline fund. I've been looking for a failure on a rally to the 18 and the 200-day average. It's too soon. We're not yet talking spring. So it's nice to see a trade bottom formed, and now the market coming down here, waiting my turn. It's not time yet. Apple's been fighting the crowd. Can it withstand the market if it drops around it? That's going to be the big question. There's nothing bearish on this market. It's in an uptrend, but it is overbought. That's all that I can say about it. AMC went from the upper Bollinger Band to the bottom one and back to the 18-day average and stumbling there. Exactly what I teach in the enhanced Bollinger Band course. I mean, classic what I teach as to what it did. XLF turned bearish on the close. Why? Lower highs, lower lows, the first settlement under the 18-day average of closes, maybe since back here in January. Uh-oh. If it breaks from here, the lower band. Let me tell you what I don't like about the trade. What I don't like is the narrowness of the Bollinger Bands. When I see that, I get very uninterested in the market. I want them to be wider so there's room between the tops and bottoms. When that happens, if you go to the bottom, and I think you will on this pattern as momentum is turned down, you got your shot here. Let's assume I'm wrong, and I'm wrong a lot. So the market comes back up. To prove me wrong, you got to get back over this high of 37.08. Barring that, you've opened the door to make a run down to lower prices. XLI, I don't see anything. A higher high, lower low, overbought market that's getting a correction. It's been here, done that, not impressed with it, keep coming back to the 18-day average and going nowhere. In SOX, you're overbought. Now, if this market gets under $412.99, and that's far away, it's a $10 drop, it would look pretty bearish on the charts. At this point, you have upside momentum, since you're over the 18-day average. You have the trend down, and you have the market trying to turn itself down. Actually, the momentum, I said that wrong. Let me come back to that for you. As momentum on the chart is determined, right, let me come back. Going the wrong way. There we are. As the momentum will turn. if the market gets under the 18-day average. I knew I was doing something wrong there. In XHB, the home builders, okay, none of the numbers keep coming out good. And you know how selective the home builders have to be. I'll tell you, the kiss of death could be, if I'm right, that the Fed has to keep raising the rates. And what's going to happen upon that, this will roll out over. Any move under 68.37, to me, is going to be exceptionally bearish, opening the door for this market to get back here. Why? Because if the Fed's going to get aggressive, and if these numbers stay and they stay strong, the Fed has to go with rates up across the curve yield will drive mortgages higher, and then you've got that problem. And I realize you're seeing all kinds of deals coming out by savvy and very bright builders that should. They'll say, you go in, get it, we'll pay for a refi when the rates come down, blah, blah, blah. I don't know how many people will qualify. I don't know how many want to pay the up price. And I am not in the camp that home prices are coming down much. Why? There's not a supply. In order to make prices come down, I understand demand can shrink, but you also have supply that has to be sold. Why do you want to move into a rental to sell a house? Doesn't make sense. And are rents falling? No, I don't buy anything that you're hearing about that. They're staying strong. We just saw the CPI prove it. XLE, if you take out right now the lows of yesterday, not today, you open the door up to come here. Momentum sort of down, not trending at this point, could get hit right here. Gold, how does gold withstand a strong dollar? I've been trying to say this, how do commodities withstand it? I don't understand it because I think the dollar is not in the phase right now where it's going to weaken very much. Why? Because I think we're going to get several rate hikes and the economy is very strong. It's the Goldilocks scenario. Normally you worry, I'm going to keep raising rates, I'm going to break the economy. This economy, every number is showing the Goldilocks. Can this scenario continue forever? No. But is it there? It's there. And until it's over, it ain't over. Silver, same thing. Nothing but problems. Embedded readings. Copper, not an embedded reading. So it's trying to get bounces in it. It needs trying to be the big buyer. We haven't seen it yet, so you've got to be patient. TLT, I want no part of the long side. This market could go anywhere to the downside. Downside. This represents all that we're talking about. Now, admittedly, it's the 20-year. It's not the nearby ones. So you always want to pay attention to which yield you've got there. This is the dollar index. Does that look bearish to you at all? If it does, you need to go take my charting course. That's quite bullish, actually. Did we develop an embedded reading? Well, both numbers have to stay over 80. They're both over 80. They're both over 80 on Wednesday. What about the day before? Lo and behold, we have 3 days in a row. So until the red line closes under 79, buying pressure stays in this market, according to my theory, and you're embedding to the bearish side in the euro. I don't want to be buying foreign currencies. I like the dollar on this. So the other thing I like, and I hope you like it, is you got a shot at the sale, 50 off. Website, iraepstein.com, under research. Just take your cursor right here. You can call my staff. It's for new and returning members, people that have quit their subscription for any reason and coming back, and I get quite a few. I'm Ira. You have a good day. I will talk to you all later.